It's a full pack. I can see that. And talking of Dubai, it has to be. It's all about finance, making money, markets, investing. And so before we start this panel, I'd like to thank my friend Pallav and the entire team of KMS Bazaar. We have cherished this relationship which we have, and Pushpa indicated how articulating their right factors. Also, we really value this partnership. I'm happy to be with my friends over here on this panel to talk about. So, even I was guilty of this issue when I was speaking now and business journalist for many years. That there's a lot of conversation in the market about what, kya lega, kya bechega. But there is very in proportion, very little discussion about how, especially in mid-cap, small cap. This category, it's extremely difficult to navigate. The broader narrative is बहुत पैसा मिलता है, but I'm sure many of you will believe, and our friends here as well, that they have टूटता भी मालूम है. And because people do not pay attention to the how why when we talk about navigating the big cap small cap. So this panel will try and dig out with all three of them on what are the nuances of how small cap, mid cap, thriller कैसे कैसा बनता है पैसा. What are the rules? Because all three of them have data to prove that they have navigated this space very well. So each one of them have different style. But before that, coming to small cap, mid cap, we are sitting right now in Dubai, where the world is a playing field, not only Indian small cap. Yes, Indian small caps have started getting a lot of attention at respect last 2 years. There was a time when small cap was in fact, it was seen set out things. Investment grade. But sitting in Dubai, the world is a playing field. Why should you take India so seriously? That is my first question. Year's point of choice, dollar returns, compromising of the last where something. So that is the point where I all three of you to reflect lately about why to take India seriously, especially for people who have other markets as well in their portfolios. Let's start with your area. You also have, let's start with this side. What are your approach?
So, thank you so much, Ajay, and thanks everyone for being there. So, I would just start with saying this that, we keep talking a lot about what about dollar returns in India. And like you rightly said, that small caps on the play, and there are so many risks and a lot of volatility. But I'll just give you one stat, which will give you clarity in your mind that how in the small and mid cap space, the breadth and the width in the Indian market is expanding by leaps and bounds, and how so many big companies are emerging, which are like a very good promoter. So just going back to 2015, and all of this is in dollar terms, the number of companies listed in India above $500 billion market cap, above $1 billion market cap, are just 300 companies above 500 billion and just 200 companies above 1 billion. Today, in January 2026, just 11 years later, and all of this in dollar terms, number of companies above 500 billion are more than 800, so almost 3x. And number of companies above 1 billion is close to 6 and 3x. So this has happened because there has been compounding at a very significant scale in those small companies, and they have become, such large liquid companies. And mind you, in the last 15 months, we have had so much of volatility here. Like the previous PPT also showed almost $25-30 billion of FII outflows, etc. So first thing I want to, hammer down is that there are a lot of opportunities in the small and mid cap side in India. We have seen that play out, and from here, as both the macro and the micro is favorable, that will hopefully play out in a bigger way. So from a rupee depreciation perspective, it's not that we should just keep fear or that we should look at the opportunities on the basis how I start this with.
You got the right question. You have to spend a lot of time right now. But you will get very attraction in global markets, but focus can take us to India. I think that if you talk about the buy, so I wasn't just people out there why they're thinking about this. So what I've seen is people are more
inclined towards higher single digit, early double digit returns here because structured products, the safety and the I think the uniqueness and the creativity which is provided here in the foreign markets is very, very good. Yeah. So 10-12% अपने को कुछ करने मिल रहा है without any risk. So I think any person should favor that as compared to if you're talking about equities. But I think you should have it is a portfolio, right? Your wealth is your portfolio. You should have a portion of everything. Let's talk about equities first. This is a very small data that we've listed in our pamphlet as well, which I was also based. When we talk about the last 5-year returns, where we have all seen returns coming between Dubai real estate, real estate all over the world, be it metals, be it, any type of asset. The returns that we've seen, you guys will be amazed, when we talk in dollar terms, we always think that in dollar terms, India is not performing well. But if we look at the Shanghai Composite, in the last 5 years, there has been only 4.3%, while the FTSE has done, that is the UK, has done around 5. Nikkei, which is doing phenomenally well for the last 1 year, has done around 7%, whereas the Dow Jones, the US 30, has done around 9. DAX has done around 12, while the BSC 500 and the S&P 500 have both done around 12 to 13. Yeah, so we are among, when we talk about the broader Indian indices, the BSC 500, it is one of the top performing indexes of the world, despite the last 1.5 years not going in favor of India. Yeah, so that is the power of Indian middle class, the Indian consumption theory, the renovation, the renovation, I would say, growth that is happening in India. See, India, I believe itself is a mid cap, which no one of us can, we cannot have the risk of not having in our portfolio because that is where the growth is coming from. The highest growing big economy in the world is India. Now comes the point of dollar. Okay, if there is India, it is very difficult to hedge against the dollar because the RBI doesn't allow you to do so. But when you are here in Dubai or foreign markets, hedging your exposure by 2.5% cost and then not be afraid about dollar at all is not difficult. So if a fund, I believe, is working for the foreign investors, if you invest in a PMS index, you're not allowed to, or it becomes very, very difficult to hedge your dollar exposure. But when we are doing it through Gift City or other foreign domiciled funds, it's very, very easy to hedge other than 2.5% cost, which I believe is phenomenal. And the first question was about the mid and small caps. See, mid and small caps, why they outperform is a very simple thing. That majority of the funds that we know, majority of the Indian big names like HDFC and all these big names, they would like to primarily focus on the top 250 companies out there. Yeah, that is where the major research goes into. Now, when everybody is competing for that small pie, of course, the returns tend to get lower. So, where are the next entrants in the top 200, top 250 coming from? It obviously comes from the mid and small cap companies. We are seeing a huge boost of private equity in India. Yeah, people are starting to realize what the stock markets are. One question is that Indian entrepreneurs are one of the best in the world. Okay, when we look at the I was going through this article yesterday where they published how many Indian CEOs are there in the top 50, in the top 50 US tech firms. Can you believe it is 34? It is 34. So we as Indians are very, very entrepreneurial. हमें मौका मिलेगा तो हम काम करेंगे. Yeah. So all those people who have gone from India, a person who's gone and developed Anthropic like 3 years ago, 4 years ago, is now, giving challenge to the Indian tech company which has been set up for 30 years. Yeah. So the Indians are very, very talented. And can you believe that out of top 50, I think there was only one Chinese CEO. So the point is that Indian equity markets are evolving. We are getting private equity, we are getting SME IPOs. They are now looking towards the market, and the Indian mid cap and small caps will keep on growing. It's just that they are volatile. We should know when to enter. And there was this very amazing data that I presented to Ajay by the other day, that if you look at Indian mid caps every 3 years, 1 year of outperformance, and then the third year again will be outperformance. This is why, which very nicely explained to me the other day, is because of the rate. One factor is the rates. As the market rate cycle goes, the rate starts cutting, again you see a traction in the mids and the mid caps and the small caps. I truly believe, my portfolio is not positioned like that right now, but we are transitioning and I truly believe that this will be the year of Indian mid and small caps.
Interesting. Scratch that one if you were wake up. Another, what about you? What are your thoughts on Indian small cap, mid cap category as an investment class versus, whatever option is there for them?
So just coming to your first question, because I was in a very similar time in 2024, and that the question was why not India? See how the India market is dominated to change. Now the question is why India? There are so many other options. Right? When such questions come, this is what I order. It's an order. So always the bottom end and questions on the other way comes. It's we are here. So now coming to small cap and mid cap. See, small cap and mid cap as a piece will always be an extremes. You will have extreme pessimism as well as you will have extreme optimism. Now is a time where we are seeing an extreme pessimism. But if you see on ground, things are changing. Earnings is utmost important, especially when you deal with small caps and mid caps. Your entry valuation is utmost important, especially when you deal with small caps and big caps. So if you see earnings were really great in 2024. Then we saw a decelerated in earnings across the broader markets in India. The question was in 2024, the biggest mistake which any investor do, especially when you invest in small cap and mid cap, is that we start giving peak multiple to peak earnings. Markets are never linear, especially your small cap businesses and mid cap businesses are never linear. The high earnings growth trajectory which the industry was at that time, you cannot extrapolate forever. And you cannot give a very premium multiple at the peak of the earnings. And that's the mistake which happens every time. I see that's the cardinality which happens every time. The second, I think people tend to forget is that whenever that extreme optimism is there, people just focus on the P&L. They don't look at the business like aspects. Especially when you invest in small caps and mid caps, balances and cash flows are more important compared to your P&L. Because that's where, if your balances and cash flows are strong, that will be the company who will move from a micro cap to a small cap or mid cap and mid cap or large cap. A company with so-called checkered balance sheet or cash flow, you will see the history. There will not be a single company who will answer that challenge. So that's very important, especially when you invest in small cap.
Right. Before I move forward, just to understand the complexion of the audience, I'd like you to raise your hands to this question. How many of you have meaningful positions in Indian markets? Skill set. How many of you have within the India portfolio, you have very high interest in small cap India? So I was still in the game this way. Okay, so INVasset made a very interesting point the other day, and I'd like you to scratch it a little more. That small cap, big cap universe is very sensitive to cost of capital. And there's something we should observe it right now. And yes, reason to believe that the declining cost of capital can do wonders for small cap, big cap recently. So INVasset, can you just talk about that?
Yeah, so I just dwell on that point a little bit, and what we did, Ajay, for this is that we tried to look at the last 20-25 year data. Whenever a significant rate cut cycle was undertaken by the RBI. So what actually happens in a rate cut cycle is that effectively before the rate cut cycle starts, you would have had some problems in terms of either the growth slowing down or inflation not being under control, because of which the RBI or the environment is not conducive to undertake the rate cut cycle. But when the rate cut cycle starts, it takes a certain amount of time for RBI to see the data points, to see the overall structure of the economy, and then it reaches a certain endpoint. So in the latest rate cut cycle, RBI has cut rates by 125 pips, and it has been going on for like last 300 to 400 days. So we tried to see similar pattern over the last 25 years, and there have been 5 such periods. Each period is very different. Sometimes the rate cut cycle has been as long as 500 days, and it has been as high as 200 pips. Sometimes it's the same 125 pips. Sometimes it's been even 300 pips. But every single time during the rate cut cycle of whatever period it is between 300 to 500 days, the small and mid caps would have done low returns, sometimes even negative, because maybe the growth environment was not that great and there were struggles for high cost of capital as well as low growth. But once the rate cut cycle ends, the next 2-year absolute return, and it was fascinating. Maybe we can share the data also separately with you all. The 2-year absolute return from both the mid cap 100 index and the small cap 100 index has been between 60 to 100% for the next 2 years on absolute basis. Now, of course, every cycle is different, and I'm not suggesting that the next 2-year absolute return can be so much from these indices. But what happens is that after the rate cuts are done, the environment becomes much more conducive for the smaller and the mid cap companies to grow. Because the cost of capital is low, the opportunity is higher, they have high opportunity capital, so the EPS growth and flow reason of these are higher, and they also get the financial outcome of lower interest cost or being able to borrow cheap. So I think that environment is now we are entering, Ajay, and thankfully because of all the reforms which are earlier again talked in the micro equity and the macro that is there, it will be much more conducive for these companies to grow. So hopefully that's where I think we'll be entering, and since it's a good time, also valuations have corrected in the last 15 months of fall in the smaller mid cap. So from an entry point of view, you have much more choices within the whole.
And even if you look at, I mean, I mostly, I believe that you're more of a hybrid fund. You look at fundamental as well as charts, ownership factors. You made a point right now that your position, like, no, their portfolio level has got moved in cash and cash flow. Like, your position, what's the rationale and the next, are you rationally position this first or next in 3 years? What are you like?
So we are quant fund, and data is everything that we look forward with. I don't like to talk to managements also, because I think data can, like I said, like and data is everything. So we look at data primarily. One very interesting fact I'll tell you, which was one of the very initial, very initial things that I used to look at, but still holds a lot of importance. Yeah, small caps, apart from investment, they have one more. We at INVasset look at a lot of focus a lot on the greed and the fear part of things. We believe that psychology investment plays a very, very major role. And if you can control the psychology, in the short run, you will be able to generate more alpha. We are not here, so INVasset way of investing, Ajay, is not that we will keep a stock for 20 years. We buy stocks from a 2 to 3 year point of view, then where the narrative changes. Now, small cap, as I was telling, has a certain degree of influence on the greed part of things. When the small cap stocks perform, that is where the greed comes in. Until the small caps start, go bust, they just break out. Till that period, there will be no exuberance in the market, and every 2 to 3 years we see periods of exuberance coming into the market. I will give you one small ratio, if very easy to plot on charts, and everybody who's the out can look at it. You just divide the Nifty small cap by the Nifty 50. Okay, we'll get a ratio, whatever. So what we've seen in the past, be it 2008, be it 2011, be it 2018, be it this time, that somewhere when this ratio comes to around 0.9, it tops out. The small caps start underperforming. And when they come to around 0.5, they bottom out. They had the bottom in 2008, it was 0.5. In 2013, August, it was 0.5. In 2020, it was 0.5. So this is generally a ratio with small caps to large caps have followed in India over the past 20-30 years when we look at it. Since the small cap data is available since 2005, no short period, but this has been there. What I'm trying to say, small caps have a tendency to build what you call bubble, exuberance, And over the past 1.5 years, the small caps have been very silent. And we would see some exuberance coming in maybe this year or early next year. So the valuation of small cap, which I was talking about, has come down to around 0.6. We are in the investable zone. Somewhere the time correction has also happened, and now it is, I think, in a way, I would call it the duty of the small caps from here to perform and give them extra alpha. So I believe the small caps performance from here can be around 2x from the large caps.
But you are putting it very gently by saying that small caps were silent.
Especially.
Otherwise, at portfolio level, if you ask somebody, 30-40% निकल गया person, right? So अभी next year में चलेगा अभी तो भावी वापस है ऐसा तो उसके ऊपर
Investing in the top and small caps is the most mistake you all can do, as I told you. When you invest in the top and small caps, this is one thing that you have to take into account.
Right. Now, just share some of your. You appear to be more of a balance sheet side investor, just not being. Why is it important? Because small cap, mid cap managements and the story unfold over here. Learning sort of the voice question. What is the importance of this? Making even a balance sheet change. Expected. Sure. So if you see structural reality of any company for a prolonged period of time will only happen when their ROC is decent, their cash flows are decent, and they did not value for future growth. So let's take an example, like for a micro cap company, the overall base will be small. Now assume that company is growing at 50-60% and your working capital is stretched. Now, if your working capital is stretched, every 1.5 year you have to come to the market to raise funds. The history of the market says that those companies will never become. That those companies will never move from one micro cap to small cap. You are big and large. So if you see how a mid to mega trend happens, so 3 things are utmost important. First, the governance. Governance is the most important thing. You will not see any company with checkered so-called governance record becoming big. Or if they become big, they will not sustain. Second is, as I said, balance sheet and cash flows. Because that is very important. If you are in a prolonged working capital cycle, you will keep on raising money and market will not back that. Once or twice is fine, but if you just keep on coming to the market is not right. There will be a point of time where market, if they want to give you money, it will be at a very strong temper reason discount your leverage. Right. The third and the most important thing is the overall addressable market, how the opportunity is. The TAM is very important. So whether the company is in a TAM which is sizable and whether the TAM in the journey of the company is expanding. See, there's a high possibility of a small cap company will be start and will be smaller. But if the about to approve, there will be a possibility that a good promoter will keep on expanding there. And that's how that journey from small to mega it's work for them. Just we all talk about, as you say, the winners and any fathers, and the losers are often right. And let's talk about some of the mistakes also we have actually get, right? So that we can learn. Decide to talk to us about some did क्या होता है कि बड़ा मैसेज आ रहा है ये क्या मिसिंग लर्निंग क्या करते हैं जो नहीं करना चाहिए.
Yeah, sure. Thank you, Jeff, for this question. And it's very important that we don't get carried away in the markets, right, to make lasting value. I will talk in detail about maybe one or two mistakes that we have done, but I just want to say that in investing, mistakes are part of the game. So there's no fund manager, who has a 90-100% strike record. Maybe Warren Buffett is the best. Maybe he also has around 70%. So generally the mistakes, in my view, in small caps happen largely on the promoter assessment. Okay. So in the bull markets, when the small mid caps are when we tend to believe that most of the promoters will be executing in a very seamless manner. So our mistakes that we were, maybe there were sector elements in that specific business. There was a chemical company, small chemical company from the earthy group, okay, and they had cracked one product which is phenol, which goes in making paracetamol. So paracetamol, everybody takes it, right? When we fall ill or we have fever, and that was all fully imported from China. They had cracked it, and if it had scaled up, they would have made huge numbers from that business. And their core business of certain chemicals was also doing very well. Now, it was basically cracked in the lab, but not at the commercial level in the factory, and it had not ramped up. But coming from a decent group, renowned group, and since it was cracked, all the capex was looking, we assumed, right, that this should be a success. And once it didn't happen as success, it became, a lot of spiraling issues for them for quarters no end. So I guess sometimes, it is more about being able to judge the promoter quality as well as the execution. So maybe a much more diligence on the actual execution on ground rather than just the prospect and the delivery. So I would say that in summing up, it's a little bit more to do with promoter execution, and there also credibility, like Naval also said, that they should not be, case where they're just running the business based on the market money, coming to the markets again and again. So the capital allocation as well as the execution lines. Agree with you?
For me, I think it was back in June or July of 2024. I think, for December 2023, March 2024, you were one of the best performing funds in India. That was why, because we got the capex cycle very, very properly. We going into the budget in an election year, the finance minister came up with the most robust capital expenditure plans ever. And when other things were not right, we, betted very, very heavily on the capital expenditure front. We had all these stocks that we had: defense, railways, infrastructure, power, most of them which we do not sell our winners. So ultimately there came a point where we bought them at around 30-40% of the portfolio. With the increase, they became around 70-80% of the portfolio. So our bond had systems to sell, but though we rely on a lot of multi-factor models, we did not have a thing in place where what we will do when things go not, when you're not able to sell at the top. So I remember we made around 30% return in a month. Yeah. But the next month it was all depleted, and it was such a shattering thing to me that we did not have we know how to sell at the top, right? Not at the top, in the higher zone, we know how to do it. Discipline selling. No, not discipline selling. So I think the fund manager not being carried away with the success. Yeah. So somewhere it is important that when success is coming, when a lot of funds are coming in, that time as a fund manager also need to be cautious. When you advocate the behavioral theory, we need to be cautious as well. Yeah. So that is I think is a learning from the past. It's the biggest learning for me for the past 5 years.
Perfect. Because you're right. Even 2020 to 24, somebody mid-cap 10x from there. लोगों ने बेचे आज में that was your big mistake, just how you reached.
So as you rightly said, see, exits are very important in small and mid cap, because there, as I alluded to that they work in extremes. There will be extreme optimism and there will be extreme pessimism. In extreme optimism phase, you are expecting that this company will continue to heavy good pace for a foreseeable future. Businesses are not with that. There will be some time frame in a business where you will see a slower growth. Now that will get action, it will get double whammy for a company, because you are giving a very high earnings growth, a very high multiple. As your earnings growth has come down, it's a double whammy for an investor. Also, earnings obviously has come down, and so will be your valuation. So, in fact, in the short term is really high. So especially since why I say it's a double whammy because businesses will be good. Businesses will be good, but there will be a possibility, there will be a phase where the stock, because it has run up by 5x, 7x in a couple of years' time, there will be a phase that the company itself is going into a consolidation phase. And there is a possibility that a year there will be a decent time correction as well as a price correction, whatever opportunities are built. And it happens with the best of the companies. And give you an example. The top apparel retailer of India, which is Brand, we saw fantastic phase for the company, growing upwards of 25-30% plus for good possible years for us, almost 5-10 years. There is a phase where, given that the waste to our expansion happened, the company have now stayed, now is in the phase of consolidation. And it happens with every retailer. And if you open more stores, you are very aggressive to open stores, there will be a phase that you will be slowing down in terms of store opening. Now, the growth has come down marginally from 30%, and you can say high teens, 30% category. But the impact on the price, because we are investors, okay, we are not promoters of the company. Promoters doing the right thing. But as an investor, the impact is high. So that is something which is very important, that you have to exit at the right time.
So we have just 2 weeks left. Before that, let's get an understanding from all three of you what question position. Because what needs to be done, going back, perhaps was maybe capital. It's what capital. So is that?
Yeah, so Ajay, as I said, that we feel quite confident going ahead for the next couple of years to small and mid cap. So we are ready positioned heavily. We are positioned from the market cap companies from say 400 market cap to all the way to 1500.
Any sectoral favors?
Yes. So the sectors that we like are the ones where there are a lot of secular trends and less chances of disruption also on this AI and other things. So healthcare is one sector. Our equipment is one sector where we see a lot of capex happening for both energy transition as well as for all the other data center sector. And also we are quite bullish on the financial side. So there also I think a lot of opportunities are ahead. So these three is somewhere we are quite focused on, other than the manufacturing, of course, of the precision parts across 3-4 sector industrial orders.
Anirudh, what's your position right now?
So I think our portfolio is very concentrated right now. So primarily around 50% of the portfolio would be financials. Yeah, because I think 30% of our portfolio is around public sector banks, because we believe not only public sector banks, new lending banks, newer NBFCs. We believe that we think that anybody who's not lent for the last 10 years is who will make books and will get profits. The people who have made their books in the last 10, 15 years are people who will face those problems and also, the book problems. Apart from that, we're very, very bullish on the stock market part of things. We believe that there's been a very, very good shift from, the FD culture in India to the equity culture. And going back to the FD culture is now, I think, what's happening in India. So somewhere all these AMCs, all these distributors, stock exchanges, if the NSE IPO comes out, we are very, very bullish on this segment as well. Apart from that, I believe that inflation is subsided. The world still post the US and I think there is still a serious conflict between the biggest consumer and the biggest producer in the world, and that will stay for another few years before things settle down. Very difficult to survive. So I believe this best play on this is metals in India. We are one country where metal companies are there. And in the late parts of cycles, we've seen and historically them perform very well. So we are bullish on the metals part of things.
Right. That was last question here. Right.
So I'm almost up. So few sectors which we are bullish on, like on the lending side, both on the NBFC side, we are quite bullish on. So if you see 3 parameters on the lending business, one is credit growth, second is your margins, third is asset quality. We are at the bottom of all these things. The credit growth we are seeing an improvement. Margins, especially in the declining interest cycle, the margins for NBFCs especially low. And asset quality, we are at the bottom. So we have recently exposure to other INVasets, RT down by PFCs. Airport survey is something which we write selected portion of airports like more on the power distribution side, and companies related to power distribution like with cable wires company. Electronic manufacturing again is something which we write on the airport side. And last, I think is the consumer discretionary. I think the time has come for India for that segment to go really well. Because if you see that journey of any developing economy where there is a current structure, you will see a stronger growth in the less traditional products, more on the discretionary kind of a product. So you are already started to see that, and you will further see that. So these are the few segments which we are working as well.
All right, Eddie, I would have loved to take, ask them each and one small cap and kept it for next 1 year. But obviously, they will not do nothing about that. I'm by the All right, thank you very much, all three of you. To the audience as well for listening so patiently. Hope you enjoyed it. Thanks.